This is exactly how I turned $32,000 into over $100K in just 2 months with this exact trading strategy. And I'm about to show you exactly how well this strategy works, what I look for before I trade, and how insanely well this works for passing funded accounts. So if you're tired of blowing funded accounts and second guessing entries, this might be the video that finally clicks for you. This strategy is the reason I could jump on a funded basically whenever I want and pass it, while most people lose their account in the first 48 hours. The best part is this strategy is stupid simple. All you're doing is finding a bias, watching the charts, break, retest, break. And it works so well with funded accounts because this is so easy to do with tight rules, and consistency can never be a problem because you're using this model. This is designed for traders who want that consistency and don't want to over leverage, because that's not how you get results. So let's get into step 1 of this strategy. Before I get into a trade, I ask myself 2 questions. What direction does the market want to go in? And is the market actually giving me permission to take this trade? I see it all the time. Most beginners just get into trades without asking themselves these questions. They revenge trade, they get emotional, and then of course they blow their account. And I was one of those people too. I used to shovel money into Apex and just felt like I deserved to pass an account eventually if I spend enough money, and I'll get a payout eventually because I deserve it. The market does not owe you anything. You will be in this continuous cycle for the rest of your life if you do not decide to make a change emotionally and strategically to give yourself a chance to beat this market. You're going to end up in a position where you are never going to see results if something does not change. Those emotions you feel and those feelings that you do get are things that will never transfer over into profitability, so you need to eliminate them as soon as possible. That's the one great thing about a model, is that you don't have to worry about setting things up. It will do the work for you. This is how I find my bias. One of the most important things about this strategy, giving ourselves a decision to make before we start trading. The simple answer to this is go on the higher time frames to give yourself some sort of plan going into the day so you can stick to one side. I think it's very important when you do get into trading that you stick to one side majority of the time during that trading day, because I'm sure you guys have experienced it where you'll get sells and then you'll switch to buys and then you'll go back to sells and you'll switch back to buys and you'll lose all of them. You'll be like, damn, why did I switch my bias? This should be something that is planned out before you start trading. Get up earlier and you can go on the chart and find what is going on the higher time frames to give myself a side to play. In this conditions, if I like sells, I will go into that day only looking for sells. Not only is this going to make it a lot easier for you to trade less, but this is also going to give you more confidence going into your day, waiting and watching price fold out until you get that time to strike. And then it's going to help you out a lot more with your consistency. For example, we had this 4-hour high right here get formed. And then of course, what do we see? Rejections off of it. You guys see we had this 4-hour high that we created right here, and watch how well price reacted off of it. Well, guess what? It went over it. It would have stopped me out. You have to wait for candle closes or else trades do not count. I'm not big on liquidity, but it is important to see price get above and then back below. That shows you that sellers are in this area. They're in control. When you see a candle like this red one right here, you see price went above this high, rejected off of it, and went even lower. That shows me that sellers are in this area. And anybody who got in that trade, you guys see on this candle following it, did the same exact thing, went even higher, came all the way back down, stopped everybody out of this, and we continue to move down. Is anybody surprised by seeing this candle right here and watching this big drop that followed afterwards? I would personally say no. But going into today, we actually saw the 4-hour candle starting the bottom wick, showing a good sign for buys. I liked buys going into today. And where should we have been targeting buys is at this high. And of course, it would have played out. For every session you get into, you need to go on the 4-hour, you need to go on the 1-hour and find what price is doing, because when you're on such a micro like we are, it can lead to so much up and down volume. It can lead to so much chop. It can lead to so much consolidation. If you just stick with the higher time frame, most of the time it's going to be a lot easier for you to see consistent trades. And not only that, man, these higher time frames is where you make the big bucks. Before we get even into how to trade with this model, I want to show you how to not trade during bad trading days. A big thing that I like to do is wait till 10 o'clock to take my first trade. Now with this, usually there's a red folder around then, so I usually like to avoid news when I'm trading. Bonus tip. But also it gives you 30 minutes of watching price action. And not only am I watching price action, I'm staying disciplined. I'm building up my confidence to take a trade. I'm watching what's happening, seeing if I can get any benefits from looking at the chart, how it is forming right now, seeing if it's correlating to my bias. And not only that, we finally get to, at 10 o'clock, we get to set up the opening range. Now, a super simple reaction for this is to go on the 15-minute, find the high and find the low of 930. You should not be taking a trade most of the time until you see a break of this range. When you see a range that's this tight, it's very hard to trade. And so guess what? You don't do it. And look at what happened throughout the whole day. We got right above it around 3 o'clock and just continued to stay in this until 3 days later. It's so important when you do trade every single day. At this point, I've been trading every single day for over 3.5 years now. I've seen so many bad days. I've seen so many good days. Determining where you put your money is so important when you do something like this. We want to put our money when things are going well. When we feel like there is an opportunity and our edge increases, usually not going to be inside of a range. This is what you want to see on the 15-minute time frame. You see not only is this range a lot bigger, but watch how quickly we got over this. We set up our high, we set up our low, we wait, and we watch price action. This break above, what does it tell us? We can probably continue to go up. And look what happened right before market open on the 4 hours. So we would have been finding our bias before all of this happened. And look at this beautiful rejection off this EMA. This shows us big buys coming in. What happened? Big buys followed up. So we would have had a bullish bias with an opening range that broke to the bullish side. That could only lead to one thing: cash money. When you can do that, when you can build a bias and then you watch the range get set up and then it breaks to your bias, that is a sign of, hey, I probably should put my money in today because this is exactly what I wanted to see. When you come into a day with a bullish bias and then it ranges and then it breaks to the downside, do you think you should be trading then? Yes or no? No! Now that you've locked your bias in and you know how to find out how to trade on the higher time frames, get everything set up, get your range, get your bias, let's get into finding setups. Now that you found out how to set up your opening range and how to find a bias on the higher time frames, let's get to finding out how to actually set these trades up to make us some money. And this isn't just about break, retest, break. This is about finding confirmation, watching your setups form out with your bias and your opening range, and taking the best trades you possibly can, putting our money in the best position possible every single time. But before I show you exactly how to find these setups and execute them correctly, let me ask you, how many times have you skipped out on your confirmation, entered too early, and just completely got destroyed in your trade? First of all, you're not insane. This is completely normal. You got a common case of FOMO and everyone has it. This is going to lead to emotional revenge trading, giving yourself hesitation before you take your trades, and guess what? You're going to lose your account. Shocker. So it's extremely important that you wait for all of these signs to give you confirmation before you take your trades to, again, give yourself the best chance to win. Let me show you exactly how. This model is called shadow supply. Guess what? I created it. The first part of this model is to go on the 15-minute. This is where most of our operating is going to be done, and we need to find a candle that has a bigger bottom wick than it does body plus top wick, and this is for a bullish scenario. And from that point, we're going to take our little drawing tool and we're going to draw a zone from the open of the candle all the way down to the bottom of the wick. And now we're going to go on the 3-minute. So this is what I call a 4x magnification. This is something that I created. We find the zone on the 15 and we magnify it down to the 3-minute to give ourselves a better look at what's really going on. From the start of this zone going forward, all we want to see, of course, waiting for the candle to close, is a break, a retest, and a break again. Let me use my highly advanced drawing tool right here to signify our break. We want to see a retest, a close inside the zone, and then a break again back above to enter the trade. And as you're watching price unfold, all you're looking for is just that first close. That is the first step of this process after we get the break above. And you guys see right there, it happened. You got to make sure your zones are very, 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 very clear, because sometimes it's very close. We got the retest of the zone, and right after it, ironically, we got the break back above. So guess what? Boom, we got the entry. Enter this trade. Run a 1-to-1 off of the zone that we created. And let me just, Now you can say, Steph, you handpicked that trade. So we're just going to close our eyes. We're going to find an area. We're going to go right here. Let's go to our nearest New York session. Bang, market opens up right here. Let's go on the 4 hour. Let's get a bias. 4 hour, it looks like we have a lot of sells above us. Look at all these wicks we have going on up here. We also really don't have a clear bias right now. But if we go on the 1 hour, I'm hoping, yes, we can see pretty clear bearish bias right here. We had a nice bearish consolidation that leads us to probably play shorts right here. If this candle that's currently forming closes below this wick right here, I would 100% be looking for shorts. So we're going to go for that. Let's go to 10 o'clock so we can set up our opening range. We can see this is the high from 9:30, and we're going to mark out this little area as our low. Little pro tip, if you ever have wicks like this that are kind of overlaying, mark the bottom of the wick that is closest to it all the way down to the lowest point, just because this is the most important part of the zone. This is where we're expecting to see most of the action going down. Next step of this, I want to see a break below this low to open up shorts for us to play. And we didn't get this set up until 2 o'clock in the afternoon, but you see right after we break this low, we actually set up a shadow supply entry. Remember what I talked to you guys about? In a bullish scenario, of course, it was to the opposite side, but now we're looking at a bear scenario. We want to see a top wick that is bigger than the body plus the close. Really advanced ruler tool right here. If we click right here all the way up to the top of the wick, we see that that is a 28 point top wick, and you can clearly see the bottom wick and the body is not that big. So we're not going to get rid of that zone, and we're going to mark out this area to look for a short entry for. That candle just closed. Let's go in the 3-minute, and we see we already got the break below. We need to see a retest, a close inside this zone, and a break back below to get an entry for this. Boom. Boom, entry right there, baby. So we see right here, if we were on a 1-to-1 off of this, again, we get in on the candle close, and then we set our stop loss at the high of the zone. This would be a 29.5 point 1-to-1. And guess what, guys? I'm just going to click play because I know this is going to work, bro. Let's go. Let's go, man. Yo, come on. Come on, man. What y'all fucking thought? Bang! Big thing that we can talk about here. We didn't get our first entry for this day until 2 o'clock. So the problem with this strategy is sometimes it's going to take a long time for you to get a setup. But that's the best part about this job. You guys want the free time. You guys want the lifestyle. All you got to do is check the chart every 15 minutes. You can set some notifications up. You finally get an entry. You stick to your plan that you came into the day with. You minimize all that over trading, all that over risking, all that emotional stuff. Wait for the entry. Take it regardless. And bang, smack that. 30 points, walk away. Not too bad of a day, I would say. Ideally, the golden rule for most funded accounts, especially the smaller ones, is I would suggest 5 micros per trade. Now, that is completely speculative and up to you, but again, you're going to be running 1-to-1, so position size is going to be pretty important, as well as the consistency rule that most funded prop firms really give you guys access to. You want to make sure that all your trades are pretty consistent, and as well as the emotional effect on your brain. The more consistent your trades are, the more money you consistently make or lose per trade. It's only going to be easier for you to take these setups, and sometimes these trades will linger, but most of the time you're looking at a quick in and out once you guys do get into a trade. You guys see we did wait multiple hours for that setup, but once we got our entry, it was only 2 3-minute candles, which is 6 minutes. It's not too bad of a work day, I would say. So this is somewhat of a scalping style, but the approach that you're getting, the methodical process that you are looking to and you are finding every single time you take trades like this, you really do invest and get confidence and grow your bias as you're watching this trade unfold, hoping to get the setup. And if you don't get the setup, you just move on. The way that I would say that this gets invalidated is if you see a close above, like we did right here after we hit TP, that is when the trade would be invalidated for me. I would close out the zone and I would look for another setup. The best part about this strategy is the trade management. You know exactly how much you're willing to risk or make every single trade with the one simple technicality. Set up your stop loss, you reflect it into your TP. Right when I create this zone, I see how many points it is, 28, 29, whatever. I know going forward, I'm probably going to be risking around 30 points per trade. If you cannot do the calculations in your mind with the position size you plan on using and you see that number and you're not comfortable with taking a trade risking that much, size down or don't take the trade at all. But from a trade management aspect, you are literally just sitting here. Once you get your entry, you take it, you follow the setup, of course, get the entry, set your stop loss up, run a 1-to-1, mirror it, boom, you just walk away. You don't do anything. It's very simple. I freaking love this thing. And once again, this is called Shadow Supply. I did create this. This is something that is all over my channel if you'd want to look more into it. But this is what real, true profitability looks like. It is being able to come into the day with a plan, get it set up, wait methodically for it to play out, knowing that I'm only going to risk my money if I see this and this. I'm letting the market come to me instead of chasing the market, and that's the difference between you and me. The more you act and hold and treat yourself like a professional, the more money you are going to get, I promise you. I know trading can be overwhelming, so if you want to speed run your pathway to profitability, click that top link in the description and get to work in the one-on-one, and let's make passing funded accounts and getting payouts a reality. Just like Rice Fried Shrimp, who got his account out of drawdown with using this exact model. Thank you for watching, and I think it's time for you to get to work.